Good afternoon, everyone, and welcome to the PivotBoss Monthly Market Outlook for September 2022. Thank you for joining me here today for the Monthly Market Outlook. My name is Frank Ochoa, also known as PivotBoss. I am the author of the book Secrets of a Pivot Boss, and you can also find me at pivotboss.com in addition to our pivotboss.ecofin.com trading room. And here today we will be looking at a ton of opportunities here, both directions, both up and down. For the most part here, this market has been in a continued bearish downtrend here, especially over the last few weeks. Today's strength, though, could lead to a bounce higher, or it could be another one of those bear market rallies that gets heavily sold in the next day, and we'll explain. As always, we'll be looking at various stocks, futures, and a couple of crypto. And also, if you have anything you'd like me to take a look at, please put it in the chat boxes, either in the trading room or in the Zoom chat. I'll check it, and we'll get to it when we can. Ton of opportunities here to get to, so we're going to go ahead and get started with our PivotBoss Monthly Market Outlook for September 2022. Looking at the intraday time frames just real quickly here, you can see how strong the market was today. Backing it up a little bit, several hours worth. These are 4-minute charts here. One of the things you'll see is barely a push through the previous session's lows, barely pushing through the previous session's lows there. Previous session's low is here, and once those were rejected, it was a reversal back to the previous session's midpoints. Once price was able to push through the midpoints here, it was a full-on trend day to the upside and a big-time outside reversal. So that's where price pushes through the previous session's low, and the way I define it, price then closes above the previous session's high. And in addition to that, there is size requirements as well. You'd like to see greater than average range compared to its 10-day average, and that's what we saw today. We saw across the board some very good rejections, but is it enough? Is it enough to get these things going much higher? Today the ES finished at 129% of average range, the NQ finishing 122% of average range, RTY at 120, and YM about the same. Is that enough to get this thing going to the upside with these rallies, or do we see a big time reversal ahead? Let's take a look here at the ES in the higher time frame for a moment. Quickly here, one of the things we mentioned last month, just to start this thing off, was last month was shaping up in a way that could lead to strength. We mentioned that we could see a rally out of some of these markets. We had several candidates that did quite well, but it was a short-lived rally. It went up half the month. It rallied right back to the 200-day moving average, hit it one morning and then pulled back, or one day and pulled back. And from there, it's been south ever since in a very aggressive sell-off, giving back the breakout gains. So initially in August, we were bullish. We were bullish because of the market structure here that we had seen. There was an ability for price to push up. It held the top of market structure and started to work higher. So we said there could be a shot to come back to the recent highs here, maybe as high as 4,300 and the 200-day moving average. And we saw that play out, but then a significant turnaround. This zone right here, heavily sold, and that was Friday morning, 9 a.m. Central. We had Fed Chair Powell speak. That turned into a huge 200+% of ADR day, which in essence shifted the current short-term trend to the downside. That's the current trend we find ourselves in right now. When you look at this from a broader perspective, again, we're still trending down. Clear upper trend line here, clear lower trend line here, and we are now fighting market structure right at the center of the zone. Downtrending market with the potential to see further weakness. So that's why a day like today is very strong. A good rally. Again, in terms of average range, We had better than average range across the board. So if we look at a 1-day range right here, again, you'll see the ES is at 129%, right near that dot there. Outside day up. Outside day up. And again, the way I define an outside day, you have a low that's below the prior low, at least a bullish outside day, and then you have the close, which is above the prior high. Additionally, you want the day's range to be bigger than average, and it is quite a bit bigger than average, so you get your buy signal there. So again, there could be additional strength that plays out tomorrow. If that were to be the case, you'll likely see a modest overnight pullback of some nature. You look for a strong morning low, so you're buying morning weakness for a shot at afternoon and late day strength. Check mark trend day up, and you push higher. That would be the bull case scenario. Any failure to stay above 39.36, this midpoint, could be an indication of weakness to come and perhaps even an outside day down. So right now, huge day up, big intraday rally, a major move to the upside, a high range day. That's pretty solid. However, we have Fed Chair Powell up tomorrow morning, 8:10 a.m. Central, so 20 minutes prior to the RTH Open, Fed Chair Powell begins to speak, and that could influence the market tremendously right from the get-go and prior to the RTH Open. So it's kind of up in the air how this is going to play out. Does Fed Chair Powell say something dovish and bullish, in which case we pull back and find early strength and bounce? Or does Fed Chair Powell remain on the same hawkish path that he's been in for a while, which has led to countless sell-offs when he speaks, right? Any one of these, any one of those, the very day or the very next day tends to be a high-range sell-off day. That could be in play tomorrow. If price is up here above 4,000 in a downward Pima trigger zone here with the 8-period sloping across the highs, if prices find itself above 4,000 and starts to see weakness, that could be an opportunity to play this thing back to the midpoint of the day. And it could also be an opportunity to see an outside day down, very similar to what happened here. So tomorrow's Friday, we have tomorrow's Thursday, Fed Chair Powell up. Last time it was Thursday prior to the Friday he spoke. And you see the rally that happened a day or two prior, and then a big outside day down. So, is today a bear market rally? Is today a bear market rally? Is today a Lucy rally? Something we mentioned in our trading room today. And that's where Lucy from Charlie Brown, she puts the football there, and as soon as he's about to kick, she pulls the football. Is this what we've seen here? The last time we were talking about that was this rally right here, and we talked about the Lucy rally there, posted a cartoon about it there, and you can see the huge turnaround that happened since then. That's been the tendency, given the overall downward trend that we've seen this year, outside of a couple of short-lived rallies. So again, with today's strength, it's not bad. Very good, especially on an intraday basis. It was about as good as you can hope on a year like today, this year. But at the same time, we're in a very aggressive downtrend over the last 3 weeks. We still remain below the 8-period averages. This could be another bounce within a downtrend that allows for another selling opportunity to come on board. So tomorrow, I think the primary course of action, obviously, initial jobless claims is pre-market, an hour before the RTH Open. That'll be an event that provides some volatility. Then Fed Chair Powell comes on. Once that occurs, we'll have some further clarity about how the market's going to react. If we find ourselves rejecting these highs and aggressively dropping toward this midpoint, we could be looking at a big-time outside day down of some magnitude. As this turnaround comes in full place, you return back toward the June FOMC key level, after this recent rally and that rejection, we've been headed back toward that level ever since. So we could still be headed lower. Up ahead today could be a one-day rally. Now here's something that there was a good question about in our trading room earlier, is this pivot range right here. It's a higher value relationship. It's an overlapping higher value relationship. You know, over here would be a lower value relationship. From here up to here, that's a higher value relationship. And there's, when you have these relationships with the pivot range here, there tends to be an early indication of how the market may trade off of those levels, depending on circumstances. And in this case, when you have an overlapping higher value relationship, that would suggest strength. But the weakest form of strength. It's not a full-on higher, it's overlapping higher, so it's rather weakened strength. But then where price closes the month, that's very important. For price to have formed a higher value relationship, but then close below the upcoming month's pivot range, that's what we call a bearish change of bias. And a bearish change of bias would suggest that the first test into the pivot range for the month is sold for new lows below the prior low. That's already played out this month. You can see the first rally right to it. I mean, didn't even get inside, just right to the bottom of the pivot range, led to a push downward, and we got new lows yesterday. It's already kind of played out. But today was a massive reversal back up and back above the previous month's low. Is this going to provide an additional push higher into that pivot range for another retest? Will that retest also see new lows? So again, tomorrow early on is going to be very important to see how this plays out. You have today's high and close, which will be very important. The primary opportunity from a day trading perspective tomorrow, watch today's high and close. A trap above that zone could lead to a fade after trend day back down, and that could be a morning trade that's pretty much done by the time the RTH Open comes around. Now what happens following that will be very important. Again, can we stay above the midpoint and bounce, or does it fail outright and we get one of these days, or one of these days, or one of those days? And that's the point about this current trend and this current year, is that many of the biggest days have been bearish days. Many of them have been bearish days, and when you've been directionally bearish, a lot of them have been failed new highs, failed new highs, failed new highs. Will tomorrow be another failed new high and drop? And odds favor yes. Again, with Fed Chair Powell on deck, a lot of what he has said lately has been taken negatively, suggesting more downside to come, increasing rates, and things of that nature. But again, anything can happen, and we have to see how it plays out. But as of right now, very cautious on this strength and watching for signs of failure and a decline back toward these lower levels here. When we look at quarterly pivots, a lot of these previous quarters closes are in view. It's basically the break-even point. So this is where it closed the first half of the year in Q2. Price took the previous close bid, rallied, hit the 200, and now we've been dropping toward this zone ever since, which is right in line with the FOMC. So, to me, it appears that the market is still working toward this downside target. Additionally, if we didn't need any more evidence to know that this is a Fed-based market, price is currently trading right at the July FOMC key level. So the last time Fed Chair spoke here, this thing rallied for the FOMC. Then he spoke here 9 a.m. and it sold off. And now he speaks tomorrow, and we're right back to the scene of the crime here, awaiting the next move. And it's right at the level. So again, this market pays attention, so we should as well. Having said that, the ES right now, if this is a failure, these markets, we could see some selling pressure ahead over the next 1 to 5 days, maybe 1 to 2 weeks. If tomorrow is a strong day or an up day, I would still be cautious. Say we do pull back and we rally a bit, we could go on a 1 or 2 day bounce and still find resistance and drop. Just ask this move right here. It could be a 2 day rally and still drop. 1 day hold and still drop, right? This is a 3 day pullback and still rally. It's the same concept. So we could pull back 1 or 2 days and still see weakness. I think in order for this market to see some strong movement to the upside that we should be confident in, you probably have to get back above 40.25 here. To get back above these prior pivot highs would suggest that we're trying to make a move back up a bit up the range. So that's kind of the zone to overtake here from a swing bullish perspective. But right now, kind of heading lower. Today could be a counter trend bounce within a downtrending move. Keep an eye on the previous session's high and close here early tomorrow. Fed Chair Powell on deck here 20 minutes before the RTH open. That's going to be significant. Initial jobless claims an hour before the market opens as well. Looking at the NQ, similar price action here, and here's the previous quarter's close. Again, this was a market that rallied last month. We noted why we liked this to rally and other candidates to rally as well. We had the top end of these key ranges and things of that nature that were in play. It broke through the top end here, held it, so we mentioned, hey, this thing could rally back toward these highs at around 13.6. And they got there. It got there, and then it held right at the yearly VWAP, held right above it, and then failed at it, and has been dropping ever since. So this is significant again, the way it's played out. Obviously, we got the rally we were looking for earlier. It was a 2-3 week rally, and that was about it. And then we've since fizzled and taken it all back. So this is significant. Yeah, BC, that's right. Bottom pivot, you wanted to see it lower. That would help. The way it is in that prior example wasn't the case there. And also you mentioned here the 21, 34, 55 PIMAs are all injunction. Does that tell us anything, like 55 crossing below the 34? So yeah, right here they're all very tight right now. And they've been crossing really over the last several months. You can see again, this is the 55 period, which is resistance. And then right about here, it became support or the bottom of the trend, and these other faster ones moved up. And now you come over here and you can see, as he mentioned a moment ago, the 34 is now dropping below that 55. So that is another indication of resistance ahead. And the reason why I put this 8 period as a yellow or golden line that stands out is because it's the most important, the most receptive EMA, the PIMA we have. It's very fast at telling us the trend. Ideally, if you're staying at or above it, you're bouncing until you fail to do that. And you can see how quickly it went from being way up to taking that area offered and being way down below it now. And so how hard that thing slammed is a reason why we're also seeing some of this turnover here. And so now when it comes up from below, these can tend to become resistance as the next drop occurs. So while, again, while we may see a rally tomorrow or see some strength, it could be short-lived before it drops further. So I'm still very cautious right now of this move. Today, fine day, fine strength. Is it enough? I don't know if it's enough to really get things going. But we'll know more if this thing can start climbing above those prior highs here and back above the July FOMC. That could open up a bit more. Until then, we might be looking at any strength being sold as these PIMAs start to roll over. Yeah, so again, not bad on the strength side, but do we see weakness up ahead despite the strength? YM looking very similar. Downtrend and an up day in the downtrend. Look what has followed these up days. Big weakness. This was not an up day, but it was positive against the open, down. Same thing here, up day, down. Here's an up day. Do we get a big, huge slam down? And as we're working back to the previous quarter's close. Took it bid to begin the quarter. Perfect rally. V-top and a big-time reversal now. One more move, and we're there. 30,700 is that target. That could be about a plus 1,000. You know, if this thing rallies up here to 700 and fails at the dropping 800, it could be 700 to 700. 1,000-point move to the downside. So, you know, we'll see how this develops here tomorrow, but that's something to keep an eye on. Is the potential for these rallies to be shaken out and see a big-time reversal the opposite way. I would be very impressed if this thing can rally and put together a couple of strong days, but that hadn't been the case here since we topped out earlier in August. Now, I did want to talk a couple other futures as well. In terms of seasonality, there is a bearish seasonality to the ES and the NQ at this time of year. So let's look at seasonality here for a moment. There it is right there. Let's go percentage. Oh, good question here. Steve, yeah, the bands that I'm showing in Thinkorswim right now are yearly, so they're starting at the beginning of this year. VT, which I may show a little bit of later on, that one has bands that are started on the fiscal year. But the ones I'm showing right now are yearly. Let's go back to the ES for a moment. You'll see right here, recently, this is the current price action this year, currently down. You can see right up here, this little peak, that's basically the Memorial Day holiday, and you tend to go lower for the next month heading into October. One of the things we talk about is the October dip, which can be the last great buy the dip opportunity of the year in many normal years. This is an abnormal year where we've seen mostly weakness. Not sure how we're going to shake out seasonality wise, but some of the seasonal patterns have been bullish or have been on point this year. This is one of them that could be on point. If we're going to see another round of weakness up ahead out of the ES and the NQ and some of these markets after a rally, then it would be in line with seasonality here over the course of the next month. And then that could lead to October lows that perhaps can lead to a modest rally into the end of the year or thereabouts. Typically speaking, you get a great year-end rally after the October pullback. So the seasonality right now coincides with weakness at the moment for the ES as we head into this portion of the chart. And again, if tomorrow's another lower high like this one, for example, got one here, then the next move is down toward these targets that we mentioned. If we take a look at the NQ, similar. Obviously, one is tech, one is not. Here's your bump. That's your Memorial Day holiday. It goes to this low right here. That takes you into the first week of October. Again, a little bit of a rally here to start the month, or at least today. And then that could lead to some weakness here over the next couple of weeks. So we do have some seasonality that's bearish here, at least for September, and then from there it starts to shake out into a much more bullish finish to the year. Again, given this year's weakness, it'll be interesting to see if it can maintain that bullish seasonality to end the year, which we'll talk a lot more about in October. Now, something that's very clear in terms of seasonality is Nat Gas. Here's natural gas. For something like Nat Gas, you can even go back 10 years. I do 5 or 10-year look backs. Right now, Nat Gas showing some weakness. We'll look at that chart. But when you look at this little dip right here, again, that's the Labor Day holiday. And right at the Labor Day holiday, when you come out of it, there's a very clear path to strength that basically takes you right to Thanksgiving in the States and December 1st, basically. That period of strength in Nat Gas is one of the strongest seasonality patterns that you can have, because it's a commodity where supply and demand is almost clearly shown right there on the chart. Again, you go Labor Day into the coldest spells of the year here for many parts, and the demand for Nat Gas increases, and you see that clear pattern of strength that pops out here. So right now, from now until December 1st, we have our most bullish seasonal pattern here for Nat Gas. Now, if we go back and take a look at Nat Gas itself, we're currently in a sell signal at the moment. On this day right there, we had calculated a narrow 12-day range, became a narrow 13 range, and we mentioned that given resistance, we're likely going to drop back toward at least 750, but more likely somewhere around 725 based on ADR measurements. We started to get that initial break on Friday. Tuesday was heavy. Today was a pullback early and then sold, and we're still working our way down. And based again on this 13-day narrow range, we should get somewhere between 7.25 and 750. And this lines up with the seasonality that we could be looking at moving forward, because if we tend to see strength between now and December 1st, then this pullback here could provide the buy the dip opportunity for a seasonal push higher. So right now, the expectation is for more weakness into our target zone down below, 725 to 750, which would put us, kind of at these levels right here. And if there can be a strong low here, that could be perhaps a fadeable low back up as this thing works higher during the cold season here. So some thoughts right there regarding Nat Gas and seasonality. And speaking of seasonality, we also have crude oil, which tends to show some seasonal tendencies during this time of year. As of right now, just speaking strictly technical, today was a massive meltdown day for crude oil. Down 6%, lost 5.22 points. Major transition day. This is what I call a transition day right here. A huge full-bodied day that breaks a significant market structure level. 86 is that level. 86 is that level. 86 is that blue line, basically. That was the previous year's high. Again, so you can see it right here. You go back this way, it's the previous year's high. And price started the year at this blue dot, which is 75, and rallied up to that high, then pushed through. Right here's your FOMC key level, 87.22 from January, and we've rallied off that level. We've returned back to it, but we've maintained support above that level until today. Today, it took the 87.22 offered, it took the previous month's low offered, the 86 market structure level offered, and it sold off tremendously. Today actually hit S3 on the yearly developing bands, which is 3 standard deviations below value. The last time we were above it was back here, and we talked about that being potentially an opportunity to fade it from that perspective. So right now we're at it. We're getting a buy signal, but no rejection. So this thing right now, based off the fact that we have transitioned through this level, the expectation is to walk back the move from January. That takes us all the way back to 75. And it starts with a day like this that smokes through 86, and now every pullback is a selling opportunity as this thing approaches 75 up ahead. Today's a huge day, 154% of ADR. So let's quantify that real quickly here. Drop that down. There it is. 154% of average range. You can see the blue bar that pops out right there. Huge day down. Tomorrow, more than likely, a little bit of a fade. That fade could be sold, and we're dropping again. If it's a narrow compression day, kind of a compression after expansion, then the next day could be a failed high and drop. So it's kind of like dropping here and then holding. Then you get your failed high and you start to work lower. Other times, you may drop like this. You pull back, that's your fade. Retest after fade and drop. So this suggests more weakness up ahead. Any bounce, even as high as 84, could still be sold, and you're dropping toward 75 on a swing basis. This is a huge move right now for crude oil. If you take a look here at the seasonal pattern for crude, the seasonal pattern goes against the grain here starting now. So once you come out here, you tend to see a lift in price over the next 6 weeks or so. A lift in price. That lift in price can tend to start next week. So perhaps we drop down to 75s. 75s could be bought for the seasonal pattern move up 6 weeks higher back towards, say, 86. So right now we're coming into a bullish seasonal pattern, but we're currently in the midst of weakness. And very similar to Nat Gas, we're playing for some more short-term weakness. If we find a strong low, that short-term weakness could be bought for a seasonal rally back up the way of 6 to 8 weeks. And again, this is a seasonal pattern on a 5-year. If we put this out on a 10-year and look at it, it's still present. You know, you still have this move that happens to about here. It's not quite as pronounced as the 5-year view, but it's still there nonetheless. But overall, again, still headed downward. And if we take a look again one more time at the daily time frame here, whenever you tend to drop through a prior distribution that looks like this, where it just auctioned higher and then left that distribution, you tend to go down very quickly, and then you tend to reverse back course and come right back up. So that's why, again, we could sell off over the next several days, pick it back up off 75 as it returns to 85. From there, it could keep trading here and down, or whatever it's going to do. We still have this distribution next. So if we do drop, that takes us back to about 66, and that gives you 86 to 66 as your market structure zones. So some things to consider here with crude oil. Another one here is silver. And then once we get through with this here, we'll start talking some stocks. But silver, I'm having to be cautious here on being overly bullish silver. This thing has been super weak. Gold has been super weak. It's been in a very clear downtrend, very pronounced. We've since rotated off the highs and dropping. But silver right now is showing a couple of bullish tendencies that could be very beneficial here over the next several days, maybe in the next several weeks, depending on how strong it gets. But still, again, overall downtrend is clearly intact since the beginning of the year. The short-term downtrend, very clearly intact. You can see the bearish Pima trigger zone right here between the 8 and the 21, and we're right in that zone. So it's, you know, again, the likelihood of this bullish move failing is high. I would say if there's a failed new high above 18.5, then maybe this thing dies. But from a bullish perspective, we've seen a rejection right here at 18. So here's the lows. It dropped through those lows. It even gave us a sell signal like it was going to go down. and then today failed new low and a bullish close through the previous session's midpoint. 9 times out of 10, when this happens, you take out this high and you can tend to continue higher. So this looks like a trap. Looks like a trap. It's almost like this trap right here. You're trending up, buy the dip, and it goes up, and the very next day failed new high and drop, and that was a trap. Same thing here, downtrend, sell the rip here, and instead of going down, it rejects and close higher. That's a bear trap, and the thing squeezes. So this is a trap off the mid here, off the previous month's low, and off that 18 level right here that's very prominent. From a short-term perspective, this looks like an opportunity that could return maybe back to the previous month's midpoint. If you're going to reject the previous month's close and low, and they're both at the same level almost, you reject them both in the same day, the only level left to test now is this midpoint. Beyond the mid is the high. So I could see a case here where this could be bullish. It could lead to a short-term move back to, say, 1930. It could lead to a follow-up move even higher than that. So this is one to keep an eye on. Now, silver also has ETFs, one of which is SLV. Here's the SLV right here, and you can see this one looks favorable as well. You got this low right here that's being rejected. You got the previous month's low and close both rejected. You got a big move up today. If you can pull back and hold 1680s, maybe we got a shot for 1790. Come back to these highs and that level. Right? That could be an easy short-term target ahead. So you can make a case for silver here and its ETF. Let's go one step further and let's look at AG. This is a silver company, First Majestic Silver. And if you look at today, this also has very bullish properties as well. You got that low right here at 7.2. You got the market structure below it. And then price pulls back, and you can see today bullish outside day up, a strong finish above 5-day highs. 5-day highs, a strong finish. So again, you could see a case here where the first pullback could be bought, and maybe we're making a move back to 8.50, maybe $9. So those are a couple of bullish opportunities based off of silver that could be in play, but perhaps SLV might be the best opportunity here, using options to be able to take advantage of a short-term move higher, and beyond this level could open up perhaps even more strength. I think as of right now, this should be considered a very short-term play given the overall weakness. 1 to 5 days up. You know, if we pull back and rally tomorrow, that could be a great one-day move, which could follow into about a good 5-day continuation. So we'll see how that develops. Again, very clear downtrend on the short and medium terms. So this one could easily crap out especially with Fed Chair Powell on deck. But if you're looking for bullish opportunities, this could be one to keep on the buy watch list. Another one here that I want to talk about is ETH. This is Ethereum, and man, what a turnaround today. Yesterday, a huge failed new high and a drop, sell signal to boot. Today, failed new low and rally, buy signal to boot. So we got quite a bit of chop in here. Strong pivot highs and lows on either side. I've maintained that ETH appears to be outperforming Bitcoin by leaps and bounds, especially since they all bottomed out. Since they all bottomed out and we reached that 900 level on the cash, this thing has doubled off the lows, going from 1,000 to 2,000. And it has pushed through a significant CLVN at 1,300, which is still untested. You only had this one day through it right here, and beyond that, it's been gapping and holding. 1400 significant level as well. That has held on multiple passes, and now you're getting a failed low. You know, again, this is a very significant level right here. We still may be in a zone here where increasing rates may still affect crypto and some of these bigger coins. Yeah, if this thing can't hold 1400, we have a new low coming, which could be rejected very quickly. As it is, one of the things I mentioned on this drop was 1400 to 1425 could be a great entry, because it could be not only a short-term entry where 1400 to 1425 opens up a return to 2000. We've already seen that price recently, and that's a good percentage move, you know, a 40% gain perhaps. But if you have a long-term outlook, long-term being next year, 2 years out, right? Can this thing get back to 2850? So from 1400 to 1425, you double if you get back to 28 to 2850. The reason I point that level out is because that's the May FOMC key level. That was the day where, again, Lucy pulled the football. The next day after the Fed, and Fed Chair Powell helped drop this thing significantly, and it's never recovered. At some point long-term down the road, I think that's going to make for a very good magnet and a target down the road. And from these current levels, that could be a very good percentage gain to that area. So this is still a good zone. Are we done with lows though? I don't know. The way it looks with Bitcoin, it just hit a new low. So again, if this thing hits, we're dropping to a new low. But the way that 1000 was held, I think it'd be a strong rejection, and it's trying to hold. We're running out of runway to the downside, which is something I mentioned when we were dropping back here. You know, this range right here was a 20-day range that had, you know, enough juice to get this thing like to 200. But was it going to get to 200? Not likely. So we were running out of downside runway on this one. And again, it looks really solid. It's looking the part. Today's or rather a failed new low with a bullish close above the mid is pretty solid. So was yesterday though. So whenever you got these competing strong rejections day over day, it's a signal that something's coming here. This thing is coiling up and it's about to move. So keep an eye on both of these edges here. It could be significant in the near term. When you're looking at Bitcoin though, this thing not getting off the mat. Today it hit a new low, 18,360. I'll be honest. Initially we talked about a 10,000 point drop from 18. If it breaks 18, we go, or 28, we go to 18. This is 18 right here, and the futures still haven't tested it. Obviously on the cash it got below that one day where it kind of wiped out on the weekend, but that was what we were looking for, a 10 handle drop, or 10,000 handle drop here, 28 to 18. But once we got in here, it looked like almost a given that we might make the next move down into that 12.5 zone. That could still happen. This is a strong rounded top here. We're selling off. It's still testing lows. You know, one big day through 18, I think, gets you down here sub 16. I mean, you're there very, very quickly. You got to think that if we start a path through support here, it starts to work all the way through this LVN zone. And then it brings up the point, well, do we get value? Do we get 9,300? That would be, again, a 50% haircut from where we currently are. A 50% haircut, but it could happen. We will see here. Again, ETH is outperforming tremendously compared to Bitcoin. This thing still really hasn't found a strong low, but 18K is held very well. And if you look here on the yearly pivots, it's the S25. which means it has to hold, because if not, last year's range was so wide that the S50 puts you all the way down here at like 7,000, 8,000. That's 8,000. So if it can't hold S25 here, then S50 might be next, and that's going to be a massive, massive drop, percentage-wise, especially after what we've seen since the 69 highs. So Bitcoin not really doing it right now. ETH looking a lot better. But if this thing does make some dramatic drop, you got to think that these cheaper prices will elicit some sort of short-term bounce back up, which could be very good. And then if it can go beyond that, maybe we found a low. So we'll see. But this one's not looking very healthy at the moment and could be due another big drop. ETH, though, you know, looking quite a bit better by contrast. All right, let's get to some more stocks here. If the market's going to drop tomorrow, right, if the ES sees a failed new high and we start to drop, for those of you who are in our trading room and use the MGR scans, the midpoint gap reversal scans, it'll be interesting to see if we get to use it tomorrow, because if so, it would be a massive sell signal. An MGR signal is basically when you have a big day up, as we do today, you have a midpoint way over here, and you're closing way up here, right? And the next morning, at the open, price opens below the mid, below that mid. That's a massive overnight shift in sentiment, a massive gap down. The tendency when that happens is for the early strength to be sold and you drop. If Fed Chair Powell is speaking 20 minutes before the RTH open, that's enough time to get prices selling off ahead of the RTH open, which would cause some big time gaps down if that's going to be the case. For example, SPY doesn't trade overnight there and show that overnight data like an ES does. It has a close that's right here. Where is the open going to be tomorrow? If the open is below 394.40, we could be looking at MGR sell signals that are going to suggest weakness up ahead. And these signals are pretty solid when they play out. You know, there's certain days when they play out and it's tremendous. For example, right here, you have this big day down. The next day, SPY gaps up. The first pullback is bought, and this thing rips higher the rest of the day. That is a tendency there. So again, this could be one of those days where we're trending down. We close bullish. We have pre-market headline risk in the form of the initial jobless claims and Fed Chair Powell. And if there's selling pressure prior to the RTH open, we could be gapping here tomorrow. In that case, MGR sell signals for the win, and we could be looking at some aggressive moves to the downside. So it wouldn't be the first Friday that we end lower either. We ended lower on that day, and that was a Friday. Then you go to this day. That was a Friday. This was a Friday with Fed Chair Powell. Tomorrow is a Thursday with Fed Chair Powell. Where are we on Friday? Are we seeing some sort of continuation? So this is going to be very interesting heading into tomorrow's market. But just a heads up, if we're going to be opening down here at the RTH open, MGR sell signals will be our friend. Taking a look at another stock here, or stocks now. There was a few stocks that, if the market goes down, you may want to keep an eye on. Tesla's one of those stocks. I know right now it's up. It hasn't sold off nearly as much as some of the broader market here. But, this was a big day up for Tesla. Big day up. But it's in the midst of a downtrend over the last few weeks. There was a higher high rejection. Then it broke back below yearly VWAP here. And now it's trying to retest it from below. We have a key level here up above that. So if the market's going to drop tomorrow, you likely see a failed new high here and drop. Again, if the market sells off prior to the RTH open, maybe this thing is gapping here and it's an MGR sell. But this is one to keep an eye on in case we do drop tomorrow. If it's going to be weakness, this one might be turning around pretty quickly and giving back some of today's gains. Another one to keep an eye on from the sell side is UNH. UNH, as it pops up here, UNH turning down off a significant resistance already, so you can see the 550 resistance here. The 530 support failed, so that's a little market structure there. When it fails, it tends to drop. And over here, it failed. The retest was rejected, and now we've been trending down for 3 weeks as well. Man, if this thing opens up a little bit more weakness through these lows, if this high is sold, for example, we could be dropping another leg down, and it could take us at the very least back toward 500. That's where you have the 200-day rising moving average. You have the rising yearly VWAP as well. That could be a magnet for price. If it's going to reject the edge, it returns to value. If this is 500, or right now sub 500, but let's just call it 500. We're trading 520 right now. Maybe this thing rallies tomorrow, 525. That's a plus 25 to the downside that could be ahead over the next couple of few weeks. So this is one here that could be headed lower as long as it stays below 530. Another one here to keep an eye on is, to the downside, that is CTVA. And again, this is if the market drops. If the market drops, you're going to see some of these candidates return or reverse from resistance. This one has great resistance here at 63. You got that lower resistance here at 60, or support at 60, kind of like what we just saw a moment ago. When it gives that up, it's significant. Big day up today, but you have kind of a rounded top, maybe a head and shoulder feel to it. If there's a failure here, if we gap down tomorrow, if we start through 60, it could be a massive transition day, and now you're working your way back down. And again, VWAP would be that target back toward 55, 59. And just in general, we have quite a bit of very bearish stocks in tech sector, especially semiconductors. Semiconductors have been crushed. If you look at something like NVIDIA, you wonder, how does a behemoth like NVIDIA continue to see weakness, continue to see new lows? Never really bounced alongside the market, instead rounded top and drop. This thing is getting punished, and we're still working our way down to the previous year's low. Previous year's low is there. Here's the previous year's midpoint, and it's been a long road to that level. We could still be headed down there ahead. Semiconductors as a group, not very good. Here's CROX. That shows you a composite down here near the lows. One of our members in the trading room pointed out SOXS, which is the inverse semiconductor ETF. This thing rounded bottom and rallied. So if you want to take advantage of that in long-only funds or long-only accounts, this would be one of the good ways to do it. But semiconductors getting crushed. If you look at something like Intel, look at this chart. Look at this chart. 56 to 30 this year, and it's just nosediving. Just nosediving. Aggressive sell signals across the way, just getting crushed. It looks lifeless right now. And so if the market's going to drop again, you can beat up on what's already getting beat up, and which means any bounce is a selling opportunity as some of these things continue to play out. And you can count them off. We talked about Taiwan Semiconductor here recently. Right now, Taiwan getting buzzed by China. I don't think that is very helpful for the world economy here and what we got going on already. So, Taiwan could be, egged into some sort of conflict here. And what's that going to do to how they operate and are able to provide for the market? I think the market's already told us. I mean, these things are getting crushed. You look at AMAT, weak. And you have these narrow ranges at these lows. Whenever you drop and have a narrow range, man, it is fodder for a failed new high and a continuation at times. So these markets right now still showing quite a bit of weakness. AMD just not very good. So as a group, semiconductors among the worst performers. You can add crypto related stocks. You can add Bitcoin miners to that list. Those have been very, very poor underperforming stocks and industry groups. So in a downsliding market right now, those are a couple of groups that you'd like to pay attention to. On the buy side, let's talk about some strength here, some potential for strength. Last month we talked about CROX, and I'm going to talk about it again. Last month we talked about this rounded bottom and how price had pushed through the rim of that pattern and was starting to work its way back into this market structure. And we were rewarded with strength throughout the month, and it only faltered in the last 4 trading days of the month. But for the most part, it actually played out. It rallied alongside the broader market, and then when the broader market was pulling back in heavy fashion, this thing was able to hold some market structure here. The last couple of days are quite bullish. Wick reversal, a continuation here, and we're sitting right at value. I mean, we are right at value for the year. But if you look at this from a short-term perspective, I'm talking about 1 day to 5 days. If this market's going to bounce, if this stock's going to bounce, a pullback into, say, 75 or 74 could provide a bounce that takes you as high as 85s. That's the edge. That's your dropping 200. That takes you just beyond those highs, right? You just get right into the zone. We could see about a plus 10-point rally. And the most bullish scenario, buy the dip and rally. So that's a very short-term outlook. Some of you trade short-term, some of you trade more active long-term. This could also be a long-term candidate as well. You got a 6-month rounded bottom that's in play, great resistance here. If this thing's able to find some sort of push through 85 down the road, then you start to open up a return back up the way, back toward 120, 125 over the long term, right? This is a long-term developing rounded bottom, 6-month developing rounded bottom. Is it enough to get this thing finally rallying? Probably not. Probably not, because the market probably still has a little bit more of a rodeo to go to the downside. But I think from a very short-term perspective, we have a good shot to see some sort of push beyond 80 in the very near term. Again, if price can hold the black dot right there on the pullback tomorrow, we might have a little bit of strength. So short-term perspective could still be there, while the long-term is still in play as well. Another stock we talked about last time around was Blink Charging. Blink Charging here was one that we mentioned had a shot to rally back toward 26.5. So we've seen it rally on that day back above the rejection highs here. The beginning of the new month, we mentioned that due to this, if it can hold above 20 here, there's a shot to get back to this blue dot. And that's right where it went. Unfortunately, extreme reversal at the blue dot and drop. But the goal was from 20 to 26.5. And at that point, we might drop all the way back down. I mentioned it at the time, because that's how markets work inside these market distributions. So we've seen a move up, we've seen a move down. And that was a solid rally. It's short-lived, but at the same time, it continues to punctuate this lower edge down here, 19 to 20. Can it stay here above that zone? If so, maybe we bounce. But I did like to see that thing rallied here last time. Right now, not convinced that it's another buy, though, at this moment. So keeping an eye on it for next time. Another one that was very similar was DraftKings. Again, a rounded bottom candidate, a break through the $15 level. And I mentioned if it can stay above 15, you got a shot to get back to 21. And it got right to 21. It's the 200-day. The reason I mentioned 21 as well had to do with these quarterly pivots right here. So remember, previous quarter's closes were being bid. You were starting to run through the midpoint. That opens up the high. The high intersected at the 200. Again, another great short-term move to 21.50, but it's giving it back all the way back to 15 already. And like I mentioned a moment ago with Blink, not quite sure that this is another buy, but we'll see how it behaves here off the 15s now moving forward. A couple of new ones here to keep an eye on. Again, I don't know how this market's playing out here from a longer term perspective. We still haven't formed the strongest of lows. We could easily continue to see weakness from a year-end perspective. Who knows, right? So keep in mind that these buy candidates right now are very short-term oriented unless specified otherwise, meaning 1 to 5 days out, perhaps a few weeks, because this market has been one that has been, again, one to sell rallies. But Starbucks looks pretty good. It looks pretty good. Wish we'd have caught it yesterday at this zone here, but a failed new low yesterday, right at market structure, and today, great day up. And it broke through the midpoint of the previous month. You know, this suggests more strength ahead. You got to go get this black line, right? According to our rules for PivotBoss pivots, you have your previous high, previous low, previous close, previous mid. And if you're going to reject one edge, you go back up to the mid. If you push through the mid, you continue higher to the other edge. So at the very least, we're going to 90. Right now, we're at 88.30. Again, tomorrow could be an early pullback and go. Maybe there's a continuation on the one-day basis here. Once we hit the 200-day, man, who knows? A lot of these markets have died at the 200-day so far this year, but what if it can push through the 200? What if it can push through 90? I mean, what does that do for price moving forward? You know, maybe this is, again, a very short-term rally, and we see selling pressure right back at these highs. But I think from a one-day perspective, 2 days, this thing can get up, and then we'll see how it responds off the 200-day. Again, another one that has a long-form rounded bottom developing, and you like to see these develop. You'd like to see these develop. It's been a long time since we've seen some good ones. This isn't the best, but it's been a long time because in order to get rounded bottoms, you need weakness. And for so long, we hadn't seen a whole lot of weakness in the market, at least not weakness from a long-term perspective, enough to create 6-month rounded bottoms. So we're seeing that now. This could be a good short-term candidate. Very strong move today, but keep an eye on the 200-day moving average for that one. Another one to keep an eye on here is Shake Shack. Shake Shack with a strong day today. From a short-term perspective, again, this is all short-term because this market's been very heavy. 44s is the level to watch. I know we're still in a downtrend here. Nice little stop run day here. If we can hold 46.70 tomorrow on a pullback, again, we could be looking at this midpoint up ahead at 50. In the best case scenario, we're up here around 54, retesting these highs. So again, this is kind of a play within the trading range. Are we still in this range and moving higher within the range, or are we about to straight up break back down and go? Is this a trap? So again, Shake Shack could be a one-day mover to the upside. Maybe it's a multiple week mover to the other edge off that zone. Another one here that's had some big-time strength today is Coupa. Coupa Software rallying on earnings. I hesitate sharing this one because it's been crushed tremendously. 380 back to 50s. Tremendous crushing move. This year has been bad. 160 plus all the way down to below 50. you keep zooming in, you keep zooming in, you keep zooming in, and you start to find, hey, this thing has actually had some really solid bounces lately. You know, ever since Q3 came around, you had one good rally here that gave you a key range to work with. You've seen strength off the previous quarter's close, and we've seen another gap here today. This is a huge gap again on earnings. Massive rally throughout the day. Very bullish profile and structure on the day. And took VPOC bid in the process as well. And that could be good from a very short-term perspective. Again, such a bearish stock that you don't want to overstay your welcome on the long side right now. But the way that this thing has bounced off the previous quarter's close, the way it's gapped off and away from that level is a very bullish gap structure that at the very least you work back to the previous month's mid, and perhaps you start working back to the previous quarter's mid and the previous month's high, both one and the same. So this one could be, again, another one that's strong from a 1 to 5 day perspective, but maybe a multiple week perspective. But again, I'd be cautious on any failed new high that just brings this thing back down. What you don't want to see is another slam after strength, you know, something like this. So that's just something to continue to watch with all of these bull candidates since we've been very strong. One that stands out as well is Toast. Toast is the software that helps folks, I guess, purchase from restaurant companies. It's actually, in my experience, has been very cool, very useful. And this thing is, I guess, can be seen as a growth company, as it's still growing. IPO release back then has gotten crushed, obviously, along everything else. But right now, it's having some very bullish look and feel. Again, another long form rounded bottom, which gives you potential long-term implications, but also a good bullish move with market structure hold, some compression here outside day today, which gives you some short-term potential. I think with this one, it has a shot to come up here and retest, say 22. Again, everything is really short-term right now until proven otherwise, but this also has some good long-term potential. And the key level to watch here will be that CLVN at 1750. Can it stay above that zone? If so, you continue higher. You break there and you start to drop back to value. So right now, very good bullish potential right now with a shot to reach the previous month's high. A couple of more here. This is Workday. Workday looks very similar to Toast right now. You can see a lot of these have that rounded bottom look. You got some pullbacks to prior resistance turn to support. You're starting to see a little strength here today. Man, can these open up a move back to the previous highs? That's all we're looking for right now on these moves, I would say, is ignoring everything over here and focusing in on the current market structure. And with the current market structure, you trade off of 155 and you rally to 180. Then you drop back to 155 and you rally to 180. Then you drop back to 155 and you rally to 180. So that's why I say with some of these, it's very short term on this strength. You know, this is a very good move, very good 2-day move. You pull back and continue through the previous month's midpoint here. The level left to test is that one, 180. So again, very short-term potential here out of this one if it can get through 166 tomorrow. Another one that showed quite a bit of strength today is Werner Trucking Company. Huge, huge outside day. 131% of ADR. A massive push through the previous session's low, took out the previous quarter's low, or close rather, but by the end of the day was outside day and was back up toward the break-even point for the month. That's a huge rejection day. Obviously, it's been a massive sell-off over the last 3 weeks. Very intense. You see an extreme reversal, a sell signal off R3 on the yearly bands, and this thing has dropped tremendously. When you see a follow-up rejection here at a key zone, again, hard not to think maybe 1 day, 2 days, 3 days higher. Maybe you get back to VWAP up above, or you start to work your way higher. So this is a good, strong rejection that could lead to some strength up ahead. But with all these long candidates, again, you want to be careful of a failed new high that leads you back down heavy. You know, this type of failed new high that just gets you crushed on the way back down. Pushing through the midpoints today will be very telling tomorrow if that plays out. Again, solar, in terms of industry groups, solar, huge right now. We talked earlier about semiconductors being super bearish. I think if you flipped it on its head, First Solar and the solar group are probably the most bullish. Again, they had that bill that came out, and these were a massive beneficiary. Huge rally. This thing goes from 60 to 135. The trend is incredible. The 8-period average rising tremendously today. Big time outside, or not an outside reversal, but a stop run day up. Man, if the rally's going to stop and we finally see a pullback phase, it will be, again, a massive push through that midpoint tomorrow. Worse yet, what if we gap down below that mid? It could be sold and we drop, and it'd be a huge blow off top type of pattern. So that's something to be careful of tomorrow in case we were to do something of that magnitude. But as of right now, massive upswing. Huge continuation out of some of these. You look at something like Enphase. Enphase is huge right here with, again, a massive breakout today and a continuation to the upside. This one also has been trending up, and then it held, and is now making another run to the upside. So unless this thing rejects at these highs, we're on a breakout to the upside. Canadian Solar, CSIQ, another very bullish solar company, another one that's built some energy up here at the highs and starting to release to the upside. Very, very strong. All of these are at or above R3 on the yearly bands. That could lead to quite a bit more upside up ahead. Sunrun looking solid as well. Not quite as bullish as the others, but you can definitely see some rounded bottom potential. An LVN above that if it breaks through that, things could be open free to the upside. Still not sure about if that one can do it, but some of these others, again, very clearly bullish, beginning with First Solar. And I know Jay here is asking about First Solar. FSLR. And I still think this thing is full-on bullish. Once you get to this intensity, in terms of that trend intensity, look how strong that bottom is, and then you go to the pivot high right now. I mean, that is an intense trend. Once it gets that intense, obviously this is an industry group that's in vogue. It's rallying tremendously. But once you get that intense on the trend, it's hard to keep it going, right? What is it going to keep going up at that pace? At some point, what tends to happen is you snap back, you form a strong low, you bounce back to the middle, you got a new key range, and now you're up here digesting some of that price action with the potential to continue higher or maybe give it back, whatever the case may be. So I think this thing is still full force to the upside, but as soon as we see a strong rejection, that could lead to a swing pullback that could then become the basis for a key range. Another one you asked about was COP. ConocoPhillips, from a higher time frame perspective, R3 coming into play. on the last two rotations down. We got a lower high and a lower low here today. We're clearly in an upswing right now. Clearly in an upswing, but this thing traveled from S3 all the way to R3. And when you do that, the move is pretty much done for the most part. Over here, it went from R3 all the way to S3. Then it went all the way back. So perhaps the upside is done on this one for a moment. We've seen the rejection. We've seen the lower high. We've seen the lower low. Right now, perhaps any bounce could be sold for this thing to drop back to VWAP. VWAP could be in play up ahead. That's about 10 plus handles down. And if you get a favorable pullback, failed new high, say tomorrow, that could be even better. But yeah, this thing may have run its course to the upside, at least short term. And really, you break through the previous month's midpoint, that's what opens up further downside up ahead. Another one you mentioned here is AXSM. And this one looks similar. Another one here that's kind of testing R3. That's incredible how many of these we've seen test R3 here lately, given the weakness of the market. But this one is testing R3, showing some initial signals right now. Not the easiest at the moment. Obviously a very big push. I do like the way that this thing rallied back above 50. That market structure, this move back above 50 was huge. Got you back into this market structure up here. You see where we went to in terms of the high is back toward the top of this market structure. Whenever you make that move, the tendency is that you come right back down. And then maybe you bounce and hold. So strong reaction at the edge and starting to work its way down. I think 50 could be the next target. And basically the first stocks that we looked at today are the same blueprint. Something like Blink, something like DraftKings. Again, when you look at DKNG, you got that. I got to zoom in now. You got that big push to the upside that took you across the prior distribution. Then you rejected, and you dropped all the way back to the breakout point. So I would say that AXSM is very similar to DraftKings here or Blink in that the downside is likely back toward that breakout point. Good questions there. NVIDIA, yeah. NVIDIA, Steve, this thing has been super, super bearish. That whole group is so bearish. It's incredible. It's incredible how weak this group is, and we've been trying to find a strong low for a while. It just hasn't come. In terms of big time levels, 125 is a big time level. That's this level right here. And we're dropping into it. You have an LVN that's right below it. That is probably more significant at about 115. So it's hard not to see some sort of drop perhaps that happens here, and maybe you start to bounce back, to 160. If we're back in this range, then you got to make the move across it, and then you bounce it back up. And this thing's had a couple of bounces here this year. If this thing over rotates to 115, there could be a bounce back to 160, and then we could still drop because we're back in this range. So with NVIDIA and all of these, it's hard to see a path higher right now. And that's one thing about weakness, is that weakness begets weakness, and strength begets strength. One of the oldest axioms in trading there. And the only way to kind of change that is to find a price to get buyers off the mat. If this isn't it, you got to auction down until you entice buyers to get in, and then you see some sort of reaction. Right now we're kind of in an HVN sitting here, no reaction. Today the market rallied, and this thing couldn't even get off the couch. So I think that this is still weak moving forward. But if you're looking for an entry opportunity, I'd keep an eye on 115 to 117. There's an LV in there on the other side of this D-shaped profile. We gave up the top end. We're at the middle. You continue to the bottom, and then you bounce back up. This could be the bounce back up to this portion here, 145, maybe higher. This, on a quarterly perspective, that would be your S25. And when you have a wide quarter prior to this one, that S25 means more because it's way out there. So I think this could be a very, very good short-term bounce point for NVIDIA. If it gets down into the 115, 117 zone, you could have yourself a bounce back toward 145 to 150. Good question there as well. All right, well, I'm going to go ahead and call it a day for the monthly market outlook here. We went an hour and 20 minutes strong. Again, thank you all very much here for joining me today. I will get this put up at the site, put up on YouTube, and get the recording out as soon as possible. Again, several ideas here as we head into the rest of September. A lot of seasonality here, especially with regards to the ES and the NQ. Bearish seasonality for September. You got a bullish seasonality for Nat Gas moving forward, in addition to crude oil as well. A lot of different ideas, including for silver and some of these others, and we'll see how they play out moving forward. Again, thank you very much for joining me, and I'll see you in the trading room. Take care.